Welcome back to Go Gaddis Real Estate Radio right here on AM 920. My name is Cleve Gaddis, and remember, I'm here to make real estate clear and simple and worry-free, if at all possible, for everybody who's listening. And if you want to connect with us, or you have a question or a comment, or you want to push back, or maybe share some ideas, or request us, ask us to do some additional research on your neighborhood and whether or not you have an advantage of being a homeowner in the neighborhood, go to gogaddisradio.com. You can also subscribe to our podcast and to our YouTube channel. The question I want to ask at the beginning of this segment is, a 50-year mortgage, is it a good idea or is it a debt trap? And we have a wonderful guest on, Matt Scout with Southeast Mortgage. How are you, sir?
I'm doing great. How about yourself?
I'm fantastic. I want to have a little, are you okay if the beginning of our conversation is a little bit politically charged?
Not a problem.
So my question for you is this. Why do you think there is so much? Let's just pretend for a second that the 50-year mortgage could be a good idea or it could be a bad idea. Let's just pretend it's well, we don't even have to pretend. It is one or the other. And
Yeah.
so, but why do you think there is so much talk about it within our political system right now today?
I think that the biggest thing is just they're trying to find a way to bring monthly payments down. People are so stretched when it comes to qualifying for a mortgage and the monthly payment that comes out of it, that how can we lower that? If the rates are not going to be lowered as quickly as maybe the administration would like, maybe there's some other avenues. And I think that's why the conversation's being had.
Yep. And I think that I agree with you 100%. And adding to that, I think it's sort of the optics of everything. I think the political party who is in charge, just like with all other political parties in the past, when things are going well in the economy, they sort of get credit for it. And in my opinion, when they very rarely actually deserve the credit for it, it's normally a bunch of other stuff. And forgive me if I'm callous and you're listening to me going, oh my gosh, he just doesn't like it. No, I'm trying to be honest here. But I think they also get blamed when things are going badly. And for example, I think they say that if interest rates went down a point, and don't quote me on these numbers, you've probably seen this stuff, but if interest rates went down a point, that we'd have 5 million more home buyers come into the market. Now, that's an entire year's worth of sales in the United States of America. So I doubt all 5 million will rush in at the same time. But think about that. 5 million home buyers. There's an average of 2.3 people in each one of those households, which means this is between 12 and 14 million people who might, including some kids, who might be stuck in their current housing situation because of interest rates and literally feel like their entire life is on hold. Now, I don't know that that's true, but I'm guessing that there is a huge segment of the population out there who feels that way.
Absolutely. Yeah, we have a lot of clients right now that are in the rates of 2s, 3s, and 4s that they feel they're stuck in their house. They can't go to the next interest rate up.
Wait a minute.
And they can't get that next house.
Hold on just a minute. So people who have the benefit of having a 2.5%, 3.5%, 3% rate also feel stuck by their rate. Meaning, if you ask them, if you could move today, would you move today? You think their answer would be yes. And they feel stuck from being able to move on with life because their payment is so low, and they can't in their own mind even imagine going up to a higher payment and a higher rate. Is that what you're saying?
Absolutely. I talk to past clients every week. I'm always checking in with them. I
Yep.
do at least a yearly check-in, and a lot of them say that they might have a need, but they just physically cannot afford to buy another house that might fit the need because of that interest rate, where it is now compared to where they see it going.
Yeah. And I don't know about you, but the kind of where people want to do things for their life to feel like they're moving things in the right direction. And I'm not saying everybody should buy a house or everybody should whatever, but when somebody is like, my life is like this today and I want it to be like that, I feel a lot of pressure. I feel a lot of weight and heaviness from that, because I know what it feels like to feel stuck, and I'm sure you do too as well.
Yeah, absolutely.
Yeah. Before we get into some additional discussion on the 50-year mortgage, I mentioned something on either last week's show or the week before, I don't remember, but I talked a little bit about our Get Ready Guarantee. And this is something, Matt, that you have been so gracious to offer, because I think there is a huge segment of the population who would certainly do what they needed to do in order to get ready to get their mortgage, but they don't love the thought of being judged by an outside person. And I get that, by the way, because I know when I applied for my first few mortgages, I just held my breath and hoped that they didn't really understand what was going on under the covers. And in all cases, I was able to get the loan. But you are offering what's called a Get Ready Guarantee, and it's real simple. If you're listening to the show and you want to take advantage of the Get Ready Guarantee, it's not that you'll be guaranteed to be ready. It's that within 24 hours of having a 20 to 30-minute conversation with Matt where you give him all of your information, he will give you in writing, and correct me if any of this is wrong, Matt, he will give you in writing the steps you need to take from now until 3 months from now or 6 months from now or a year from now or 2 years from now, whatever the time frame is, to be perfectly ready to qualify for your mortgage. Is that correct?
Absolutely. We're able to go through the entire conversation. Let's look at the big picture. What does your financial scenario look like?
Yep.
And from there, once we pick apart everything, we can create a game plan so that whether you are ready right now, all the way out to 2 years, you're going to know exactly what you need to do step by step.
And so let's say, Matt, that I am a potential borrower for you, and that my debt to income ratio is not quite right because I've got a couple of credit cards that have a little too high balances on them.
Yeah.
Can you actually say to me something as specific as, hey, you need to pay this credit card down to the tune of $5,000. I'm just making something up, and then you would be able to qualify. Meaning, now, it doesn't mean my situation can't change over time, but you'll be able to be very, very specific with me and what I need to do.
Absolutely. Now, we don't know if something changes down the road if you miss a payment, but as it stands at that second, we do have an actual credit simulator program that's going to tell me to the penny, here's the balance you have, here's what you need to pay it down to. And if you do this and nothing else changes, your credit will go from point A to point B and get you ready. So it's very detailed.
Love that. And now there's no cost, no obligation, meaning if someone gets it from you, they're not obligated to get a mortgage from you, but they can take that and use that for their own, and they can use it as their plan starting immediately.
Absolutely.
Now, we would love for them to get their loan from you someday, and I'm sure you're willing to compete with whoever on the rate. But if somebody wants to get that, they can either go to gogaddisradio.com, click on Contact Us, and say, just type in Get Ready Guarantee, and we'll make sure your information goes directly to Matt. But you also can just reach out to Matt directly. So would you tell them how to do that?
Yeah. So either you can give me a call or text at 480-636-6762, or email me at matthew.scout@southeastmortgage.com.
Perfect. I love it. And if somebody wants to take advantage of your generosity, all they got to do is call and do it. And I absolutely love that. Okay, let's get back into the 50-year mortgage discussion. You and I both agreed, or I think we did. Who knows? I might have said it. You might have just nodded. that really all the discussion on the 50-year mortgage is really more politically motivated, so that the politicians who are in power get credit for doing something to make things easier. And by the way, there are probably a lot of people out there who could qualify for a 50-year mortgage but not a 30-year mortgage, and I'm not saying they should or shouldn't do that. But what I'd like to do as an example is this. Give me, if you will, maybe a purchase price of a house and a down payment, whatever scenario you want, and then maybe you can calculate the 30-year payment, and let's just leave taxes and insurance out of the equation. So if you're listening to our math, we're not worried about taxes, insurance. We're just comparing apples to apples, just principal and interest payment. If we can, I could certainly give an example of what it would be. But what purchase price do we want to use, Matt?
Yeah, so I have pulled up 500,000.
500,000 even, okay, which is a little more than the average sales price of a condo or a townhome in Atlanta, but a little less than the average sales price of a single-family detached home. So probably a good one to use.
Right in the middle.
And what are we thinking for down payment?
You want to do 20%?
I'm fine. Yeah, totally.
Yeah, let's do 20% down.
Okay, so that'd be
give us $400,000.
That'd be $100,000 down. All right, and then I'm thinking that a 30-year rate would be what, 6.5-ish%? today?
Yeah, let's go 6.5 roughly.
And I'm thinking that a 50-year rate might be more like 7.25 or something like that. There's got to be an interest rate premium because when you extend the terms out, the loans get a little more risky because the buyer has less equity in the home, over time.
Yeah, let's say 7.25. Because we really don't know, but it's a good guess.
Yeah, I think the premium will be between 0.5% and 1%, so we're cutting it right in the middle. All right, so I'm saying 7.25%, and I'm saying $100,000 down, and no taxes. Okay, and no taxes, no insurance. $500,000 property, $100,000 down payment, 50-year mortgage at 7.25%. All right, what's your 30-year payment?
$2,528.
$2,528, and this doesn't. Wow, hold on a minute. $500,000, $100,000 down, 50 years amortized at 7.25%. I come up with a payment of $2,483. Is it possible that they could be that close? Wow, I would have thought that their math would be further apart than that. So 2,528 minus 2,483. So the savings, there is no way that the savings would only be $45 a month. That doesn't make any sense to me. Oh, you know what? It's because we're adjusting that interest rate. That's what's doing it. The math is correct. So the savings is only $45 a month. Now, if that $45 difference made a huge difference in your payment, you could consider doing it. Matt, will you stick with me for the next segment? We're coming up on a hard break. We'll take a break, and when we come back, we're going to keep talking about the 50-year mortgage and financing, everything financing that relates to you being a home buyer. Stick with us. We'll be back.